everyone, and welcome back for another edition of the Money Pros. I'm Oliver Tutt, certified financial planner practitioner, your host for the next half hour as we talk about the issues related to your money, how to make it, how to keep it, and hopefully how to help it grow. It's the start of a new year, so we thought this would be a great opportunity to take a look back at investment markets in 2013 and look forward to what might be in store for us in 2014. To help us with the bond market will be Matthew Dalton, CEO and managing partner of Belhaven Investments in White Plains, New York. But up first, let's talk stocks. Joining me now is our financial planning and investing pro, Rob Auclair, certified financial planner practitioner with Randall Financial Group in Providence. Rob, welcome back to the show.
Thanks,
Who better
Oliver.
to talk about the stock market investments than our financial planning pro?
Appreciate that.
So the stock market, as anybody that's even a casual follower probably knows, is it was a historically good year for stocks in general. We're going to dig into the details of what did particularly well versus other things in a little bit. But generally speaking, what were the economic, political, other factors that you saw that really drove market performance in 2013?
Well, I mean, there are some particular ones, but I think in general we had a lot of momentum in the positive growth areas. And so, a lot of the indicators and, the market reports and everything all seem to trend towards being positive. And two of the ones I think a lot of people looked at were, housing sales. New housing sales were definitely up. And, unemployment coming down. And so, throughout the year, it may not have been big jumps, but if we looked at a full year, came down about almost a full percentage point. What I look at, though, is kind of the momentum. People actually got 2008, I think, far enough behind them now that they saw some positive news with a lot of stuff going on, and now they finally said, okay, we've had 5 positive years of a stock market, and really kind of jumped back in, the people that were kind of hanging out there with some cash. So I know there's still some other money there, but I think it was really that momentum, the confidence of the investor.
So although it might not feel like it on Main Street for a lot of people, what you're saying is a couple of the key economic indicators, unemployment and housing sales, actually got better in 2013.
Right, I mean, you didn't see enormous jumps, but I think there were a lot of indicators beyond those two that all kind of pushed in the right direction, and that kind of helped the sentiment for people to invest.
And the stock market loves good news.
Always.
So let's get right to it. How good of a year was it in the stock market in 2013?
Very good. I mean, the two major indicators, the Dow Jones Industrial Average, which is
Everybody hears about,
indicative of 30 large cap companies, returned just under 30%, and S&P 500, that's the 500 large cap companies returned almost, I think it was just over 32%. So, right around that 30% return, just a great year for the market. And what I would say is, it's really a great piece to look at of how resilient the market is. If we go back to how people felt in 08, they wouldn't have predicted in 4 and 5 years we would have had those positive returns that come out. So I think it's a good lesson.
Sure, in 08 when the markets were down that much and more, and now we see a market
where are we now? And it's, taking that snapshot of not focusing on this little time frame, but the big time frame.
And if I'm not mistaken, S&P 500, best year since 1997? 96. So really, historically, I mean, almost, if you look at a decade, one of the best years you're likely to see. Now, the S&P and the Dow measure, we talk about that as a measure of the stock market, but really that's pretty specific to large industrial stocks, right? There are a lot of other pieces of the stock market. What are some of the other areas, segments of the stock market, and how did their performance compare to the S&P 500?
So I always talk about asset allocation, and I think what we need to know is S&P 500 is just going to be a small portion of what someone has in their
as part of their stock portfolio. I think we got a slide,
yeah,
don't we?
We do.
Yep.
So if you take a look at the slide here on the graph, you can kind of measure it up versus the S&P 500. We've got, mid caps, which returned right around 32%.
So just a little bit better than the S&P 500 for mid-cap stocks. And these are still stocks that companies that folks probably would heard of. We're talking about, $5 billion to $10 billion market cap stocks, but still smaller than the largest S&P 500 companies.
And then small caps somewhere between the 5 and the 3 billion mark.
So
those
still big companies,
really well.
not mom and pop grocery store we're talking about here, but it's
41% in that area.
So small cap stocks, people really made some money in small cap, more aggressive, growth-oriented companies did even better than the big companies, right?
And then we look at, international in general did really well, 20%, maybe not as good as some of these other sectors. But I think, international there's been some stabilization in Europe there, and I think that's kind of lend its hand to, again, getting some continuity and feeling, pretty good about that.
So that's the developed markets, England,
Yeah.
Germany, France, places like that, right? Eurozone countries. But it wasn't all good news, right?
Emerging markets were down, just shy of -3%. And in that area, a big piece of it is China, and China's, growth has really slowed over the last few years, and they're a big part of that emerging market. But emerging markets for the last few years really hasn't done, great.
And I think that's a great story to talk about with respect to asset allocation, because emerging markets, we've seen years where that sector is up 50+%.
Right.
Here we have a year where it's actually in the negative when stocks are doing well. So
The inverse relationship.
not
there.
all stocks do the same thing, right, when we're talking about the stock market. Now, if we were to dig a little deeper, and we've been talking about asset classes, and I think you and I both agree those are the most important things to look at, but are there particular industries that did better than others? If you look at certain sectors of the market, how did different industries stack up? I think we have another slide to talk about that.
Right, so, consumer discretionary, that led the way at 43%.
Walmart, Target, places like that.
Yeah, that, and I mean, usually those are goods that, in good times, they tend to do very well. They're things that we don't
Appliances
really
and-
need
Yep.
all the time. And then healthcare came in at 41%. Biotech had a really good year there. And then you can kind of see the rest all, double-digit results. But this was the first year, and I believe it was since 1997, that all 10 major sectors in the S&P 500 had 10% return or better. So that shows us that it's not just, a certain area
Not
in the
just
S&P.
tech stocks or
it's
something
across
like that.
the board. That it did that. So, I mean, that's been 16, 17 years of, just a really good market overall.
And how did the rest of the world fare when we look at different countries and things like that?
Well, we looked at international doing over 20%, emerging markets lost a little bit there. But, if we looked specifically, Japan led the way, and with the Nikkei returning over 50%. And, what it's been said is, that the new government in there has kind of restructured the monetary policy there.
They've been in a recession essentially
Yeah.
for 20 years, so to see that kind of performance in Japan is pretty significant.
Right. And then in Europe, if you look at the DAX, which is, the German index in a sense there, over 20% in that category. So, those two areas, along with the rest of the world, I mean, you're seeing positive returns in a lot of areas.
All right, I'm going to hold you there, but it's a hell of a year in the stock market. For more information on equity markets or for a copy of Randall Financial Group's 2013 market commentary, please visit our website at foxprovidence.com/themoneypros, where you can also view a replay of this segment. Joining us up next on The Money Pros is Matt Dalton. He's CEO and managing partner of Bellhaven Investments. He's here to help us with the rundown of the bond market in 2013. You won't want to miss it, so stay tuned. There's more to come right here on The Money Pros.